Board PS Jayakumar, the MD at BOB, to talk about their earnings. Mr. Jayakumar, congratulations firstly. It's been a better quarter for you. You've reported a profit this quarter versus the previous time, and slippages as well have sharply come down. What would you attribute this kind of numbers to?
First, I think the last quarter probably is not the most appropriate quarter to compare with. There were some accounting related changes coming from the RBI policies, so there was a bunching up effect of that. But really, we've been working on this transformation journey for quite a few now, for a couple of years now, and the effect of all the changes that we have been effect of all the work that we have been doing is now beginning to manifest itself in financial results. The growth per se has been visible over the last 3 quarters, where the rate of growth has been between 15 to 20%, at least higher than 15%. But right now, the extent of the incremental non-performing asset has come down, partly because the bad accounts have flowed into NPA, and partly because of the fact that partly because the new loans that we have been originating are of very good quality. As a consequence, there is the pipeline; they're not adding to the pipeline of the problem. So it's a bunch of things that have worked out. The third item is that so far the realization, or rather the resolutions have been muted, but now with a few successes happening in the IBC, the effect of the flow of recovery from them is also obviously helping the net NPA position.
Right. What led to sharply lower slippages and slightly better recoveries? Which sectors are showing improving trends according to you?
Now, as I said, even the last quarter, there has been a considerable reduction in the SMA2 and SMA1, because those loans that get NPA, are those that are delinquent at the point of the close of the quarter. So very clearly, we're starting off with a lower base of problem accounts, and the ability to contain them, as well as the ability to collect, realize more, has helped us in this situation. See, I don't think there is any new segments or new areas that is coming up. It's all the new set of accounts, the new originations we are doing, as we have shared in our investor presentation, is of extremely high quality, as a consequence of which incremental business is not resulting in any further slippages. The problems are rather limited to the legacy issues we have, and as these legacy issues get either recognized or resolved, the carry forward problem to that extent becomes less.
Okay, and how much of the NCLT cases have shown resolution already? Because you'd held about 60% of the cover on NCLT exposure. How much more would you need to provide for going further?
So let me start from the back. I think the coverage ratios for us, the PCR ratios, have historically been kept, conservative, and we have always, whenever we had the opportunities to take additional provisions, we have taken. In some of our areas, our accounting policies are also conservative. For example, mortgages, we provide 100% if the mortgage is not enforced in 2 years' time, as an illustration. We also take provisions on non-fund based business, on NPA accounts as well. So for a variety of reasons, our approach has always been to be, to provide as much as we required, and keep the coverage ratios high. So that's really what we've been doing so far, and we think they're adequate, but to the extent, but there's also this aging provision that kicks off, which is time related, right? So to the extent they may not be adequate in certain cases, the analysis is really that the aging provision, as they happen through the course of the year, would cover up whatever gap that might be there. So in other words, we are well protected, well provided for, but should there be need for any incremental provisions, as there would be in few instances, the aging provisions that would kick off if these accounts are not resolved would be adequate to provide for, would create adequate provision for this loan. So,
right. One last question on asset quality. Where do you see slippages and recoveries run rate by end FY19, and where do you see gross as well as net NPAs by end of the financial year?
I would rather try to explain to you in terms of range rather than give a specific number, because it's difficult to give a specific number. I think we are looking at an NPA number between 3.5 to 4.25% as the net NPA number as we conclude the financial year 2019. It's made on a number of assumptions, which include certain amount of resolutions and a certain expectation of behavior of the existing portfolio. But there is very reasonably good odds or high probability that we will be close to that level, which is 100 basis points to 125 basis points lower from the current level we are in.
Okay. And what has led to this slight bit of decline on a sequential basis in your advances in the deposit growth?
So we always compare YOY because of the seasonality factors. Usually the last quarter is the busy season, as they call it. The last 2 quarters are very good quarters. So the more appropriate thing would be to compare it on a year-on-year basis. And I think that would be. But again, when you look at the sequential number, there are 2 ways to look at the sequential number. One is the end of period number and one is an average number. Remember, we earn interest on the average balances, not on the end of period balances. The sequential growth, there's a fairly strong sequential growth on revenue on an average basis, and I think that's the same with respect to our balance sheet as well. So yes, on an end of period basis there is a decline. There is a certain degree of seasonality we deal with, but on average basis also, average outstanding receivables also and average revenues also has sequential revenues have also increased. So that's what the real position is. So I think we are seeing a continued increase in our balance sheet, in our customer numbers, correspondingly both the outstanding balances we have on the customers, and on a year-on-year basis, there's been a very healthy growth, both on an average basis as well as an end of period basis.
Okay, media has reported some time back, and would just want your perspective on this, that you were a strong contender for Axis Bank's next top position. Could you confirm if there's any possibility, any dialogue in this regard?
I've already done that, so I don't want to say that once more. We are on record as saying those are speculative and that I have neither considered nor met or interviewed with anybody for any position in Axis Bank.
Well, that's Bank